Hi everyone, welcome back. This one more session, which is actually the market is changing very regularly, and we thought it will be useful for us to have a conversation with each one of you. So it looks like a knowledge session, but it's like a two-way street. It's not that we know everything. We are also learning on the ground. The interpretation is on our side is also changing as more and more questions come back. It's not that we have access to some regulator directly. I think we are also interpreting based on the data insights we have, and also the framework which exists in the market, whatever we have researched and worked on in many years. So intent today in the session is to take you through what is happening in the market. To contextualize this digital banking unit, which is RBI's circular, which came I think almost maybe 4 or 5 days back. The interesting part is that normally RBI tends to give guidelines saying that it will be relevant from the future perspective. They will say that you actually can work on it, and then we'll make it applicable from some particular day. But interestingly, they have chosen it other way around. They've said that this one is actually relevant from today. So every entity will have to work towards it and align to the market on the real-time basis. And how do they do it? How do we go about it? That's what we will try to talk about. We also give you a framework what we understand is going to work out and what are the impacts to various segments. What will happen to say a fintech? What will happen to a neobank? I think technically, as part of the document, whatever I could see, they had this framework where you can actually the digital banking units can also be outsourced and in virtual world as well. So in a sense, I can almost see that they are making the neobanking sort of in the framework also to come in. So in the earlier avatar, neobanks were working more as a maybe outsourcing unit. Even here there'll be that like that, but they will may have an additional way of doing it. So they are, in a sense, RBI seems to be saying that please work in the market and please work in the market, work with many fintechs and neobanks as well, and go live with digital products end to end. With this, I think I'll just take you through a few sliders. The way we'll establish this session is that we will take your feedback. So I'll run this session for say 15-20 minutes. You keep raising your questions back on the chat box, and what I will do is I'll try to ensure that I'll respond back to those queries as well as I hear them out, and also maybe give you a counter view or this view or that view. I think it's something which we all learning on the market. So there's nothing I would exceptionally know. It's what everybody's trying to grapple with it. So with this, I think I'll just start the session itself on RBI's regulation or a circular which came. I hope everybody has access to it. If not, post this session, I will share this. It's on there. If you search for digital banking unit, you will get this and RBI. You will get this document. My request is not to read it from some website. Somebody who's just made a summary out of it. Please read the whole document. It's not very complicated, and I'm sure you will sort of understand it rather quickly. So don't worry about it. Just open the document, start reading upon it. Right, that will make your life a bit easier. A lot of times we depend on somebody to sort of share the document or some website to give it. I think as I speak about it in today's session, post that also please go and use your own framework to find those documents directly on RBI website and use them all the time, right? So that's my request. Just to quickly introduce myself, my name is Samir Singh Jenny, and I'm part of the Digital Swift team. And a quick introduction of the company as well. We have been in as fintech consulting firm for almost last 5 years. And of course, the market has been growing and we have been growing all along. And we are sort of connected or networked with almost everybody in the market in one way or other, as a client, as a partner, as a friend, and all of you are also helping us out as well. In consulting, we typically, why we looked at it rather quickly is because we work with a lot of entities around their digital strategy. And we have been always pushing out in the market that RBI should make digital strategy mandatory, and this is something I pushed out on LinkedIn as well a few months back. I hope also got a lot of feedback that why should RBI do it, but good news is that they have done it, and this will also ease the life of some of the small banks which were not going digital because they were looking for RBI to sort of guide them and tell them it's mandatory or required. They will do it. So we work on a lot of digital advisories, consulting on the strategy, process, and plan. We work with a lot with startups as well. We work with open banking on a lot of entities. So open banking is a key area of focus for us. We obviously work on security as well. And maybe many of you would have read our content on digital research as well. So everything is available on the website. This report itself is available on the website, which I'm showing is showcasing. You can go through on the website and go ahead. And we train a lot. In fact, there is a training on digital banking unit also coming up next month. We will talk about it. And we train in corporates, a lot of corporates and a lot of entities. Yeah. So with this, I head straight into the segment what RBI is right now talking about. And my request to all of you who have some questions, please shoot those questions back on the chatter with me, and I'll try to respond back during the session as well. If not, of course, we can always figure out. So key point so Maitri, can you just make me remove me from my admin because I'm losing bit of too many people are joining, so I'm just getting lost. Yeah. So with this, let's go into the key pointer on digital banking units. What is RBI saying is that from a look perspective, it looks like physical by nature. So they're saying that you must set up a retail digital banking unit across the country, which is physical infrastructure. They're saying you should set up a separate branches for digital, far more optimized for digital side as well. So that's the first pointer they expect you to do. They expect you to build better journeys and processes in the branch as well, including the self-assisted and assisted model. Now, when RBI is saying so, it also means something else. What they are saying is that you should actually improve the journey in the branches. Don't even make it too much paper oriented. Digitize the process end to end, and that's one of the requests. You can clearly see that. Please ensure that branches also have a digitized way. Now, if you look at many of you would have seen SBI in touch branches, or even ICICI has some digital branches as well. They're saying optimize the branches so that branches also get digitized. Otherwise, many banks have good digital journeys, but when you walk into the branches still are working on the old framework. So that's what they're requesting, go digital. They're clearly calling out that you need to develop products around retail and MSME, both end-to-end journeys, not that you do only sales, but service as well. They're also saying that you have to build significant digital business, which means that in your PNL, or at least into the reporting internally, at least to RBI, you should call out very, very clearly what is the business you have done in these segments. And if you look at today in the reports, many banks today report only the servicing side. They are saying that 85% of my transactions are digital by nature, but they're clearly calling out it's sales and service both and end to end. They're also saying that please train the customers. Please ensure that for digital banking units, you create separate top management as well. And they're also saying that you can do an in-source, outsource as you need be. So technically, you will find many of these players will become many of these banks may actually outsource these DBUs to run end-to-end potentially. And in the virtual world, they will also do partnership with fintechs and neobanks as well. So this is right now, I'm just talking about summary and we'll go in detail. On the bank side, of course, first thing they have to do is build a strategy around that. I think top 5 to 7 banks have no impact. I'm just getting you from my heart. I think banks like ICICI, SBI, they're already doing it and they may not have much impact. So they may have to just restructure some of these activities and they'll be ready for the market as well. But if it comes to other entities, they will have to do a lot of work. So I think starting point will be people have to build their digital strategy. They can't say that I'll start reporting and I'll start building branches. They'll have to also create a P&L structure for it so that they can actually allocate top line and bottom line cost as well. They'll also have to upskill their teams because digital would have a very, very big positive or negative impact if the people are not aligned for it. So we'll need to have a training of these resources on a quick basis because RBI has already made it mandatory. They will also have to partner with fintechs and technology providers. I'll talk about where and why. They will also, today, many of these banks may have APIs, but they are not using APIs much. And even if they are there, they are not be very stable. Given the nudge from RBI that you have to have APIs, in fact, the document also talks about APIs. I think these guys will have to build a lot of journeys and products around APIs. And of course, it will have to go through a lot of process engineering because the current products or process may not work on digital world, which we have seen all the time in the banking world. Fintechs obviously have an opportunity to partner with banks, and of course, neobanks will have a separate charter. If you look at digital lending platforms, will have a different charter. A pure technology company like a Perfios and Karza may have a different charter. So there will be a different impact on different entities. And of course, you will see new entities which will actually run DBUs for banks as well. And then, of course, purely technology companies will also make a lot of benefits. For example, some who are in hardware, some who are providing the software. Pure tech companies will also sort of grow a lot in this. So for all in all, I particularly personally believe, and as a firm, we believe that this will sort of as a big leg up for the market. This is what Demon did to UPI. I think this one will change the way the banks operate in the country, because RBI has made digital strategy and execution mandatory. Please continue to send your questions back to us, and we'll have to go. So I think one of the questions which I saw from Manshu is setting up DBUs mandatory for every bank, or is it voluntary? It's mandatory. How many and how is different question, but it is mandatory because they're saying they will start asking for these reports, and you can't go with the zero report for too long. So I think it's mandatory. And I'm sure it will be a slow nudge towards execution. And since they are saying immediate perspective, it will happen. I think banks will have to sort of start acting immediately. It's mandatory, whatever I can portray. On the operation side, you can say, okay, I'm not set up for next 6 months, 2 months, 3 months. That's fine. But you really can't get away from this for too long. In terms of who will be included, I think all the commercial banks, serial commercial banks are included, whereas regional rural bank, LABs and payment banks are excluded. Payment banks are digital by nature as well. And I think they don't want to sort of burden local area bank, which are very few in the country, and RRBs to get into it, but everybody else, PSUs and private banks are included. In terms of cooperative banks, I think they will have a segregation somewhere. I may not be very clear on that, but larger cooperative banks will actually move towards this framework as well, as many of them will be heading towards a small finance bank license as well. So I think everybody will actually move towards it. Payment banks don't need to, and local area banks are very few, and RRBs are definitely slightly behind on technology, and also they may actually take their own sweet time. In terms of segments they are looking at is retail MSME. Are they saying corporate don't do that? Not really. I think corporates also are welcome to do it, but I don't think corporate may much impact will be there, because most banks, only large banks have good corporate portfolio, and they're that area. If the banks, if the large corporates are expecting API based transactions, they would have already enforced. So the focus is right now retail and MSME, but banks have a choice to go digital on the anything else, and that's not an issue at all. And all centers, I think, what is their objective of RBI? Objective is to say improve the digital penetration, and RBI and government has seen that digital has positive impact on the economy as well. So they're pushing for it. The way UPI came, now they're asking beyond UPI every business. Of course, inclusion will be positively benefited. Cost, I think cost structure will also change. I think there has been largely a issue of cost because a lot of operating costs are added to the process. I think going digital has always been beneficial from operations perspective. Customer acquisition is different. That is expensive at times. And of course, it will ensure that more and more entities get digitized and more data is available for somebody to consume. So I think it looks positive, and it's also aligned with union budget what documents came up and what approach they had on DBU as well. So all in all, this is how the objective looks like. In terms of physical infrastructure, what pages are expecting, this is slightly awkward, but they have still done it, is that they're saying that the DBUs have to, digital banking units are basically the branches. I'm right now talking about the physical logic and the virtual logic, both I'll talk about. In the physical side, they're saying that please set up a physical infrastructure with separate exit and entry. Otherwise, you will start counting the same thing twice, saying that this branch is digital but physical as well. So please build it. Or what will many banks will do? Revamp some of these branches to make it very, very digitized and make them as digital branch. So many banks, many entities will actually, if let's say they have 2,000 branches, they may turn 500 of them into digital branches where the journeys are dramatically improved. And there are RBI is not saying that closed, remove all the humans in the rooms. The branch managers and branches officers are not going, but they will have a better access to technology and process, and therefore the journeys and the customer engagement will be much better. They are saying please remove any kind of physical papers and all of that as much as possible. They're expecting both self-serviced as well as assisted models. They're obviously trying to say that it should be balanced. Please talk to the customer based on the need. They're clearly calling out you need to have some devices in, right? Which means that you should have an interactive teller machine, cash recyclers, digital walls. I mean, now digital walls, you would, many of you will remember, this is what SBI was doing all through. Document uploading, automation on end-to-end, self-service card. So basically, there will be infrastructure which has to be put in these branches so that when the customer walks in, he get end-to-end servicing, including a video KYC. If in the back end you have to do it and you want to ensure that the customer, when he leaves, has entire onboarding done, you should have a devices for that. So anybody who's in this business of building these devices and all will obviously get positively impacted. Backend, this is interesting. Most banks will come back and tell, boss, where a backend does not support digital, right? And maybe I have old core banking and all this. So they're saying technically you should use the current infrastructure also for digital banking units. You should do a logical reporting separately for that whenever business happens to that. But they're also calling out that if you don't come back to tell me that your core banking does not work, you have option to use anything else, digitally native technology solutions. So they've clearly called out that you can do whatever you want. And that's so be it. I think one of the questions which I just read is that, is there a limit on number of DBUs a bank can open? As far as I can make out, nothing. I think people have been correlating it to 75 DBUs across some locations. I think that's only a framework for 75 fifth year. But from a business perspective, my belief, RBI may be expecting that all of your branches, or at least prominently most of your branches, should be digitally optimized, and therefore entire bank will be up for all bank branches should be optimized for digital journeys. So it's 100% may have maybe a goal, but that goal may be given only after some time. Immediately, not really. It's also sometimes difficult to define what is the right digital branch unit. Some of them will slightly, some of the banks will slightly change their process and may put some digital walls and say this is digital. But I think if you have to look at it in the spirit, they're expecting that when customer walks in, within 5 minutes, within 2 minutes, within some time, all his needs should be getting taken off. Don't say that, give the document and leave. Do assisted journey, do a document journey, all of that. And that's how they expect it to be done. So I'll continue, and I know there are more questions coming back to me. I'll respond back as we go forward. But for example, in India, there is a scope now of somebody to launch independent core banking platform with APIs, and this will be largely used for these digital customers. We have had enough cases where core banking has been sometimes a pain point for a lot of people. So it doesn't work properly. So I think that's something which they're expecting that this will get solved over a period of time, where some people will actually launch new core banking. We expect a new generation of core banking to come. Maybe legacy will have to either upgrade or something parallel will come, which can handle tremendously large transaction size. So it's like natively more like an e-commerce platform, which can handle a lot of transactions. And of course, it has to have those features and APIs built in. I know there are more questions coming. I'll respond back in sometimes. Just give me a few minutes. In terms of organizational structure, they are calling out that some senior management manager level guys should be coming in both in. So the idea is that while they have indicated this, all that they mean is that it should not happen is that when RBI will come for audit, they find that nobody's accountable for it, and it's a mishy-mashy. So no, this guy does that and that guy does this. I think they're clearly asking for accountability. But those who are doing it only for RBI, maybe mandate, may not be doing the right job. They will have to build a strategy, make it profitable, make a proper business case, and then optimize for it. And they may have a strategy which is logically for onboarding the customer through partners, through APIs, through their own mobile channels, their own internet banking, and also through their digital banking branch unit. So you will see 50-60% of the business will come through this segment in many of these banks. I think they're creating that this vertical should be separate. So interestingly, they're calling it a digital banking unit and other retail business unit. So they're segregating that digital is the prime one, which they expect you to improve upon. And the other retail business, which is always looking at, I remember that I've been on digital side all through my life, and people used to call this unit as an alternate channel. As I always tell them, this is a prime channel, and then rest all is support stuff. structure, right? So I think this is what the twist is. RBI is saying that DBUs will become the digital will become prime channel, and everything else will be sort of side unit or a assistant unit. And of course, they will expect you to maybe on day one, they may not give a mandate, but they will start expecting over a period of time 50-60% of the business to go digital, so that the inherent core of the bank will become digital. And of course, from an operating model, they are saying that you can actually do it inside. So technically, you can actually build your own team and own structure, own technology to build it, or you can actually work with somebody else who will actually bring the technology. So on the virtual world, you will partner with some neobank. They will launch your service, so you can count as under digital. You may actually work on the branch side, and you can say outsource this to some third party, or you may insource something, or you say part this and part this. All of that is okay, but you must follow the outsourcing model, which is already documented. Everybody who has worked with any bank and NBFCs would know that there's an outsourcing compliance requirement, which anybody knows how to follow, right? So there's a lot of framework which they have built. One of the reasons why RBI is asking for this to happen, I think this is my take on it, and this is our take on it, is that RBI expects that over a period of time, maybe next 1 or 2 years, they will be issuing some digital banking license as well in the country, which means that there's a Niti Aayog document which came, I think, 3-4 months back, where they were saying for MSMEs, which is business banking, they were expecting that few pure digital banks should come up in this segment. And if we believe that digital banking units will come up, there's also a regulatory framework coming up for fintechs and neobanks. So in a sense, what will happen is that many of the large neobanks or many of the large fintechs will be given maybe a digital banking license. And at that point of time, many of these banks will have a balancing issue, because they will say, I'm not digitally ready right now. So the RBI is actually making them digitally ready so that they can compete. Today they compete on the branches, physical infrastructure. They expect them to start competing also in the digital avatar as well. And this is a nudge, very clearly a nudge to say, when I give license to these banks, digital banks of futures, for example, for some neobanks or some fintechs, you should be able to compete. Don't give up now. And so even before they come, please be ready. So that's the pointer on the operating model side. Keep sharing questions. I know there are many more coming up. I'll respond back. Interestingly, they are saying that please do account opening for retail, which is current savings account, current account. Ensure that within the branch, all the liability products and servicing happens, including credit card, debit card, whatever issuance you want to do, all kind of merchant enablement framework like a POS and all should be able to handle within the branches. On the asset side, they're cutting across retail and MSME both. They're expecting end-to-end digital processing of loans. And they're also expecting the government-owned schemes to be supported as well. And on the digital services side, all services they expect. And this is like they have just obviously documented some of them, including NEFT, RTGs, all of that. The person should be able to do it within the branches on their own. So you will see more and more tap kind of framework coming. I don't think you will see large units coming the way you had large frameworks coming up. You may have a small tabs which will be digitally enabled. And people can actually transact, because other than locker, everything else is digitized. So these branches can actually be the funnel for training the employees, training the customers, saying, guys, this is how you do digital banking on your own, and you can do it from your home as well. So over a period of time, these guys will also end up as a training point for customers to start using apps as well. So I think, yeah, that's my point. And then they're saying, anything more you want to do, please go ahead and do it. At this point of time, I will take a pause. I'll try to respond back to questions. And just one second, let me just see. Just one second. Yeah. So I'll take a pause right now. And I'm looking at a lot of questions which came up. I'll try to respond back to them. I think there's a question which came from Vishweshwaran. There's a pointer about DBUs to be manned by scale 3 equivalent grade resource. Then what is the use of having video KYC set up at DBU? So I think the pointer they were saying is, my understanding is that you may want to do physical, you may want to go digital, both ways. It's up to you. If they are giving optionality, they're not giving a hard wire 2x. They're just saying that ensure that the units are well managed. There has to be a branch manager, an accountable person for that, whatever relevant. but they're saying bring all the tools. For example, branch managers will not be able to do video KYC there. If the customer is in the self mode and you're able to do it, then in the back end somebody is sitting and doing it from the bank side as well. Some of them may outsource some process, and therefore you will expect it. So it's not really hardwired. I think they're going only in points. Some of them will actually not do video KYC at all. They may actually do a biometric and get over with it. What is the timelines? Please share your perspective on what timelines will be practically feasible. I think my personal take is that it's already applicable, right? So what you will have to do is start reporting from maybe next quarter based on their format on your numbers. What progressive banks will do, and I'm being very conscious about progressive banks because many banks will take a view that RBI reporting ki jo basic hai wo kar lete, but I think this is more of a strategy. So many banks will actually quickly start working on their strategy, build frameworks, build revenue generation framework, and they'll also look at their, for example, branch sizes, structuring, and rebuild their models, and also realign some of the branches. For example, there's no point in building launching a digital branch if the current branch is doing really well and you have business coming up and you just don't want to replace it. You may also have some branches we are doing okay, but the branch sizes are very large and it's commercially not viable. Now you may actually optimize it, cut down the branch size, change it, or maybe convert half of the branch into digital branch and half of it into old world. You need to find those models, and then critically you have to focus not just on the branch. Actually, you have to focus more on your open banking, digital strategies, so that you can partner with others. Your mobility platform, for example, they are not giving any number for mobile, but they will expect your mobile banking numbers for customer onboarding journeys, selling to the new customers, cross-sell. I think those numbers will also be crucial, right? So it's not just a branch. My biggest worry is that people will take it as a physical infrastructure only, but where RBI is saying physical is just one part, but virtual is also good. And we can talk about where we found those pointers as well. Any notification with respect to this? And okay, I don't know which the context. The digital branches which are converted to be reported P&L in the digital bank, I think it will go towards reporting. Will they finally report purely separately as a P&L? As of now, I don't think so. I don't know, and I don't think so. But in the annual report, you will have to create some structure. What percentage of business has come through it? What is the profitability? What is improvement? But it may not come back completely as an end-to-end P&L subject, saying this is a separate branch or separate profitable center. It may not, but it may happen over a period of time. We have always been saying that 30% of the bank business almost should be coming from digital channels of the customers themselves, banks themselves, and another 30-40% should come on the partner channels where they're able to sell their products. That's how the optimization will happen, and only 30% of load will finally be on the branches. They're also saying that out of 30%, please ensure that some percentage is on pure digital branches and some are on the remaining. So RBI has actually gone further ahead. The question is there approval required to open DBU in a non-bank branch location? I don't think so. Clearly, they are not asking for it. Whatever I could read, they're not expecting any permission to be taken for a normal bank, right? So I'm not talking about foreign banks. It's not relevant for them, but it's definitely relevant for any normal bank. They don't have to take a permission. Instead of so another question which has come is, instead of bank specific digital units, can there be an interoperable digital unit which can be common across banks to economize on infra and all? I think this is up to the structure right now. The way business correspondent framework works, it works for one bank, though many BCs are actually optimizing and working across multiple banks for different products. But right now, it doesn't appear to be that you will have same for another for many. But in a virtual world, many things are possible. It might just go that way. I don't have an answer for that. Effective this is considering that opening DBUs, which are the branches with digital journey, is it correct? Okay. For SBI and others, they may still have to do a limited work, not too much, but I think it's more on the ground to figure out what the gaps against this document are, and some of them will have to be filled. But I repeat, larger banks will have to have limited work to do. Their APIs are ready, customer acquisition journeys are ready. ICICI and others have already launched these branches. They obviously have to enhance and align to it. Another question which has come is DBU a full banking license? Okay, please don't go there. Bank already has a license. They're asking them to go digital, so it's not a separate license. It is relevant only for the current banks who already have the license. Another question which is coming is that is there any special focus on private sector, public sector banks, as most private sector banks do have digital channels open? Actually, the statement is not really aligned to what we see in the market. I think we look at ICICI, Axis, and HDFC as the use cases of private banks. But look, there are a lot more private banks in India, and many of these private banks have zero or very close to zero digital strategy and journeys. I think this is where they are right now trying to impact that. Please ensure that everybody, PSU or a private sector bank, anybody in this entity will have to do it. I'll also talk about later on when they're talking about it is also forward looking. Every NBFC will have to align to this, and that's how, because RBI comes back with a mandate for banks, and later on they make it applicable to NBFCs as well. So NBFCs will also have a digital journeys, because they also give loans to MSMEs, they also give loans to retail, and they may also be asking RBI these entities to do it. Typically, their regulations are lagged by around 6 to 12 months for NBFCs. But if any NBFC is looking at it, they will have to replan for their strategy as well, because it is going to be bound to come to them as well. Is this beneficial to neobanks? I'll talk about that later. I think it's coming up. Few slides are coming for that, but it's big positive for everyone. Another question is, how will the introduction of DBU impact NUE and networks positively or negatively? I think NUE is a net. So generally, any kind of digital will help in network. So networks will be positively benefited, and more transaction would flow through. But networks can be networks for payments, network for lending, network for BNPL. Any kind of network will always grow up as people go more digital and more customer use them. So it's all positive for them. Anyway, I won't say पहले आने तो दो उनको, अभी तो आए ही नहीं बेचारे. It's slightly far. I don't think where we are. I don't even know where they are in the approval journey. I have no idea. How will banks create differentiation for BC operation versus DBU? I think BC and DBUs you should assume are similar by nature. And DBUs can act like a BC and BCs can act like DBUs. So they will have overlapping or similarity in approach. For example, some of so you can consider that what was happening in inclusion as BCs, same framework is now available in cities as well if you want to. Not much of a difference, except that the focus on digital is much more, and they will really not appreciate an Excel-based approach and all of that. Does this mean that every bank will be now forced to onboard as part of their customer base through video KYC? I think let me put it like every bank will have to have a digital journeys, and these digital journeys can be through video KYC or through biometric, but they will have to build these journeys. There's no choice. So anybody who's into video KYC business or any kind of digital by nature will logically grow because RBI कहता है. Okay, so and maybe Maitri, can you just share the feedback session, because while I'm continuing, I may not be able to speak much. So please share your feedback. We are working on another set of few interesting webinars coming or sessions coming up. We'll take them more, but it will be good to get feedback. Is it working well for you? And if you are interested in anything specifically on any of the webinar, please share on the feedback session. So Maitri, just share the on the chat the link to the feedback, right? Yeah. So let's continue. And so yeah. So in terms of impact, I think what banks will have to do, first thing, they will have to create maybe this structure as well. So they may have to do something on quick basis and something on later on basis. So they'll have to obviously create this DBUs as well and set up a separate team to run that. It may need a restructure, reorganization. We'll talk about it. They will have to, the RBI has also said that they will expect you to have a digital banking strategy, literally approved by board, of course. So I think every bank will have to build their own digital strategy to run these DBUs and digital banking segments. So please don't think as digital strategy is linked only to branches. It's only indicative by nature. Nahi to kya hoga, most of us will take it by heart that it's only branches. Not at all. It's actually for digital, which is online in partnership and all of that. So this unit will have to work on their own PNL and all. If you look at the larger banks, have already started this process way back. Others will have to do now. In terms of training, I think 25% of staff will be manning these in one way or other. And specifically also on the corporate office side, there'll be a lot of upskilling. So you'll see more jobs getting created for those who are into API management, open banking. If you look at many of these banks who have gone digital, they're hiring for API banking, this and that. There's a lot of new roles get created where they are competing head on with the banks, with the fintechs, and of course many of these jobs will actually may not be in Mumbai. Many of them jobs will be in Bangalore or Pune and Hyderabad as well, as banks to turn to go tech play much better, right? There's also players who will jobs which will get into innovation side, alliances side. In terms of what impact will happen, I think sales team will have to learn how to be relevant in digital world, both in terms of upsell and cross sell. Alignment training, for example, they go on sales, they will have to learn API banking language and maybe connected banking language in ICICI world and all of that. So there's a lot of training required for sales team. Operations obviously will have to go through a lot of transformations, so their job content and all will change in the backend side, because even RBI is saying that your end-to-end process will be digital. Every unit will have to learn how to minimize their manual operations and how to automate the remaining piece. So there will be definitely significant reduction in manual effort. There'll also be technically over a time bit of impact on job quality and resources as well. Some of them will be upgraded, some will have to be replanted for reuse somewhere else. So that's I see partnership. I think everybody will have to figure out how to do partnership with fintechs and banks and neobanks and others to co-develop the products, co-develop the journey, all of that. I mean, some of them will say co-lending is my is also a segment where we are going digital, and they'll partner with many co-lending players. And that will also increase their throughput. They will also partner with some fintechs for lending. So I think many banks will actually increase their numbers through partnerships. And I believe that's very, very positive for the market. When you have to go digital, underwriting has to improve. So I think that has to, anybody who's into these platform journeys and all, they will have to work very hard to ensure that their underwriting and all fully digital and on real-time basis. The skills on in terms of hiring and all, there are a lot of new roles, as I said, will get created. So therefore, there will be additional hiring done for product managers and technology teams and all of that. A lot of process will get re-engineered. So I think there'll be a lot of work around that, re-engineering the process so that we don't copy what is relevant in the physical world in digital world. Engines will be created, physical document will go away, and I think focus will come a lot on the customer self journeys and all of that, which is very complicated, very time consuming to figure out how to work with a client who's not visible. So there's significant amount of work banks will have to do. I think for any bank to go fully digital, which means that all journeys and products, and including for retail and MSME to go live in full digital, I think progressively they can make maybe 20-30% of their products digital and customer onboarding digital, but full onboarding and full movement will take maybe significant amount of time. Maybe I would say maybe 36 months is good time for them to plan and execute. And in many cases, they will have to sort of replace or maybe create an alternative to core banking, where you actually, instead of revamping and improving that, you may actually end up putting another core banking next to your platform, which has digital core and sort of, and maybe it's on cloud, and they will go forward with it. In terms of fintechs, I think now fintechs have huge opportunity to partner with banks and offer both on physical sides. Some of them will actually power the physical world, some of them will power the digital world, but there's a lot of value there. A lot of neobanks will come up who will support this platform both in physical digital world, and we see positive impact in all segments. We'll talk about it for first thing first. I think neobanks, thumbs up for neobanks. Neobanks will do well. Many of them many of the banks will actually, who are not able to build better journeys, will either do a white labeling partnership with them or generic partnership with them or acquire them as well. So if you see positive for them, positive for retail as well as MSME neobanks, because both of them actually will help the banks in going digital. Anybody who's working right now on partnership, I think you can accelerate. In terms of financial inclusion, again, similar stuff. Whosoever is in this business, I think will have an opportunity to partner with banks, and new players will also emerge. NBFC account aggregator and TSPs, I think again, as more and more people go digital, they will end up using these services for underwriting or for wealth or whatever purposes. So anybody in this journey will also improve. We've seen anybody when the digital improves, the platforms like a cash free or a just pay will also do well because transaction will increase. More and more accounts are account users are online, and generic improvement on APIs will help. So in platform as service, wherever it is, will improve. And anybody who's into API testing, API gateways, many of banks will not have API gateways. They will not have a testing framework. That will grow up a lot. KYC, AML, more and more digital, more and more usage. Again, all positive. In terms of technology solution provider who are building the hardware, building the front end, physical devices, all of that, they will have a huge instance of deployment. Today, it was fashionable to go digital in many cases. Now it's no longer fashionable. It's actually compulsory subject right now. So it is from optional to mandatory subject. Core banking platforms, of course, they will do well because more and more throughput will come. But there's also a possibility that we will have India, if India cannot generate good API ready platform, many banks for launching this kind of framework. Typically NBFCs do come back in the market, and these NBFCs typically have a lag of this framework where RBI gives the mandate first to bank and then to NBFC. So NBFC should ideally assume that this mandate is also for them, and they should start building on their digital platforms as well as partnership if that is required. And they can also improve their branches through journeys, self journeys. So my request is NBFC should not say that we don't know. We know how the process works. RBI comes back one regulation, and then same regulation is slightly diluted and then made applicable to NBFCs. And of late, RBI has been very, very pushy to NBFCs to ensure that they comply more and more the way banks have to comply for. I think NBFCs will also have to go through the same journey. I think from customer perspective, all positive. They will have their own banks giving better experience. So many of the banks will say that digital is actually done by only those XYZ guys. My customers don't do it, but post-COVID, everybody knows that customers love good experiences and simple experiences. So I believe there's a positivity on the customer side, and of course, generically, ecosystem is doing fabulously well. So anybody, and I think everything in the market will grow. I am yet to find an area where this will not have a positive impact from a funding perspective, partnership, M&A, all of it. I think from a thought process perspective looks good to me. Again, I'll take a pause, and I'm just looking at some questions which have come, and I'm trying to sort of respond back. My request is please provide a feedback. We'll try to respond back with some more details about this document and anything else which you are looking at. Back to anybody and everybody who gives us a response. Please go and provide your response back to us. So the feedback form, Matthew, can you just push it again? So please give the feedback on the chat and we'll share the document back to you. We've added some more slides to make it much more powerful in last few days. So you should look at that. In terms of, is there a positive note on digital aggregator? What is the pros and cons of digital aggregator? I think I'm not able to define what is digital aggregator. If it is account aggregator, they will do well. Anybody who's helping in sourcing new lending, new account opening, I think they will do well. So anybody, because until now there are very few recipients of digital business in the market, other than top 7 to 8 banks and NBFCs. Most do not have good APIs and may not have appetite to work with fintechs. I think that will grow. So aggregators will also have a benefit out there. Banks already face a risk of non-face-to-face onboarding. Can you please comment on it? Bharat, I think it's very specific. Maybe we can have an offline chat. The process will, everybody has the same risk, be it fintech or a bank, as long as underlying is let's say, for example, Jupiter working with Equitas has same risk as Equitas. Jupiter working with Federal will have the same risk as Federal's own app. So I don't think we should redefine like that. everybody has similar risks as long as the back end is the same. Why would banks partner with neobanks when they can hire and build tech in-house? That's a question which I've just seen. I think it's simple reason, it's tough to build. What looks easy on outside, it's a very tough and very comprehensive task. So my take is that many banks may not be able to build on their own, may not have resources like that, and they will go and sort of partner with neobanks for that. Rakesh has asked the question, RBI had digital branches 2014, ICA in 2019, both of them are closed due to lack of customer reports. Why do we need to go through, why do you think it's going to be successful now? I think it's not about this or that. I think it's about every experiment will fail sometime, right? So every experiment will fail. What we may even come back and redefine the branches. Today, branches sometimes are 1,500 square feet or 1,800 square feet, where somebody has to fill the form and somebody has to go through the experiences. I think what government is saying is that we look at the experiences and make it more scalable, and also from a technology perspective, more optimized for the customer base. I think some of them it would have crossed. I know that one bank had over invested in this platform, and I know that one time I went to a mall and my wife was asking that, is this ATM ka dukaan hai kya? And there were so many devices, but not a single person. I went into the shop or the office, and there was only one guard, and the guard was also curt, and I never went inside ever, right? So I think it's about a lot of experiments will fail. That's very usual, but we have to live with it and create it. So I think what they're saying is, can you build a digitally savvy branch? That's all they're saying. They're not saying if the customer is walking in, optimize his experience, build his journeys for it. If it is mix of humans and digital together, that's okay. But graduate the customer to full digital channels, which can only happen when the physical branches also intervene in training. So they've also called out very clearly that people have to work on training as well to ensure that people graduate. I think I've kept on asking, responding to questions. Okay, I think there was a question. I think my voice is breaking a bit. Let me just remove my video for a moment, and then let me attempt for a few minutes, and then we'll come back. Neobanks are any which way front end for CASA opening for banks. Do you see an upsurge in digital lending products, credit card and PPIs, and downgrades this for the customers? Especially TSP is getting a shot in the arm. I think TSPs are getting shot in the arm for sure. Do I see an upsurge in digital lending products? Yes. Credit card, yes. PPIs, not really. PPS not really. They are independent. They are anyway working well in the market in one way or other. So I don't see PPI as being the critical mode. But for others, answer is yes. PPI, no specific answer right now. There's no interpretation which is coming from that side. Branches were anyway not handling that kind of prepaid products, and anyway it's always digital for last many years. So it's actually for other segments more than actually this. So right now it's for 4:48. I'm happy to take live questions as well. So my request is, please put your hands up in the system, and we will basically take your question one by one as you want. And in the interim, if there are chat questions coming, I'll keep responding back. My request is again, please keep sharing your feedback. And those who will share their feedback, we share the document back to you. For your reading and purposes. We have made some amendments to it, some improvements. You will get that document maybe by today evening. And yeah, over to you. Please raise your hand and ask your question, and I'll respond live. So you can put your video on when you ask your questions, and just introduce yourself, and then I'll respond. So it will help to ensure that instead of only me speaking, some of you will also get the time to speak, right? So I've kept on talking. Please keep sharing your feedback, guys. Or if there are no questions, I don't see any more questions right now. So if there's none, we can even close. Yeah, Rakesh, please introduce yourself and ask your question, please.
Yeah, hi. This is Rakesh Ranjan. I'm working with Kotak.
Yeah.
I have a question. So my question is, even today, some of the large private sector banks like HDFC, ICICI, and for that matter, Kotak also, they have, their journeys already built in, digital journeys already built in, which customer can access either through their laptop or desktop. Why specifically do we need a DBU presence for customer to walk in, especially in urban areas?
Okay, so 2 pointers. One, you may actually think of some of your branches to be optimized. And today, digital banking, when we look at think about digital, we start going online and we put a APIs, but branches have not had a dramatic improvement in their processes. So recently, I opened my account with one of the bank. It's a current account, and we couldn't do it online opening. Also, we could not do when we walked into took help from someone. It was physical documentation of say 150 pages or 200 pages. So what it looks great from inside may not be true outside in. So Himanshu, it's maybe if your bank has already done it, great. You may actually improve some of the process and some of the branches dramatically and make them assigned as a digital branch banking units. So it may not have that much of impact for you. That's my take.
Thank you.
Okay. Then we have Vijay Nand Jha.
Hi, I'm Himanshu. Yeah, am I audible?
Yeah, Himanshu.
Okay, so just wanted to understand that since we are, going towards digital journeys and talking about digitizing the processes, starting from the onboarding until the whole journey. So why do we need specific physical DBU units?
So I think I have two views. I think the corporate, the way digital has been driven is always driven from digital journeys which are fully automated. But it has been, I mean, we are not able to take every customer along. Maybe the DBO framework, my understanding is a stepping stone for people to learn digital. So what will happen is that people will walk into your branch, you will teach them digital on onboarding journey or maybe video KYC, some of these, and over a period of time, they will stop coming to your branch for these journeys. So it's also a graduation phase. So some of today the target may be just to bring them on the branches, and then over a period of time go take them digital. Those who are fully digital already will obviously find this activity a bit awkward, but you still have to look at it in the branches. Number of customers still come walking in for account opening and our process is still very high. So I think there's a need for optimization. I know that most of the digital banking units have very little focus on branches. Their focus is partnership, APIs, and all of that, and branches are left behind. So I think RBI may be feeling that branches ko bhi dekh lo yaar. That might be maybe it might take. That's my understanding. Okay, so let's go ahead with Vijaya.
Yeah, Samir, thank you for taking us through details. It's very informative section, I must admit. My question is that you rightly said digital business unit or banking unit. Okay, so digitalization is nothing new for India, and UPI is a great success story. But this is limited to bank branch or like a product company we are promoting banking through mobile. So banking through mobile, already there are regulations which we need to follow, whether it's a transaction related or cyber security related. How you relate this to the existing guidelines which RBI has already in place, and this is going to impact?
I think till now RBI is not asking you to throw numbers on the table on the business done and all. I think this changes that. They're saying, okay, I'm going to ask you numbers as we go through this, and I'll start asking for reports from business and services both. So there is one clear mandate that dhanda karna hai, paper pe nahi karna. So that is one very strong. And then second, they're saying you're open to do partnerships to outsource this. So I think technically my reading is that please go and do partnership with fintechs and others, anybody who can help you in building it up. Don't come back and saying this can't be done and that can't be done. So I think it's more of a push and nudge than what they had only as a framework for mobile banking and us. There's no clear push to put numbers up and running. It was like, nahi kiya to koi dikkat nahi. There's no issue if you don't have it. Today it's like proper push. Dhakka diya. And I know on the ground when you work with some banks, they will say, yaar, jab tak RBI nahi bolega, main nahi karta. So abhi RBI ne bol diya hai, and digital study bol diya.
Maybe they learn from crypto and they want to make a legacy, or a rural banking also come at par with APIs based banking, which is being pushed from Europe market to India.
Okay. My one quick response to that: RBI, India is ahead of UK, so let's not try to compare and then put ourselves into a developing country. India is a developed country in terms of fintech as well as digital. and there are other countries also have to learn from us. So it's a two-way street. So let's not give this all power to them, completely disregarding our expertise and our experience.
I agree. UPI is a right example. Yes, I take that back. Yeah, thanks.
Not just UPI, I think a lot of Indian models are way ahead of them. I think and I'm not saying others we are not learning from other places, but I think if you look at top 3 or top 4 countries on the digital side worldwide, we are the developed countries, and many of the other countries, which so-called developed countries, are actually in a hardcore developing stage. They're copying some of our models to do that. We also look at them with respect of not against anyone, but I think our color is brown does not mean that we should become do not respect us. I think I find it I'm like hurt with that sentence that API is UK. No, not really. India is far ahead. Okay, Vimal, your question, please.
Yeah, hi Samir, thank you. I'm from HDFC Bank.
Yeah.
Two questions. That one, that there is, RBI specified there will be X number of DBUs. There's a number that they have put. Essentially, when we look at a DBU, under the DBU, the bank can have multiple partnerships, right? It can be, there's no number of partnerships under a DBU that can be managed. Point number one. Point number two is, while DBU is equal to BC and BC is equal to DBU, that you already stated out. How do you see the convergence and the evolution of the BC industry in light of this? 3, that since RBI is yet to come out for a regulation for fintechs, right? What is the likelihood that the regulations for fintech could be regressive? When you look at this whole DBU concept, and possibly there could be if banks start investing into it, that there could be a I would say the cracks which can appear subsequently.
I think BCs will find it tough to compete in this business because they are not native digital. They will have to innovate to compete in this business. So I don't give much credence to them. I think this will give a bigger space for fintechs to come in and neobanks to come in, because they have built the infrastructure as well to go digital, and then they will obviously innovate somewhere to partner with banks. So physical infrastructure there'll be a BC role, but I have doubts on their efficacy. It will be actually largely digital guys who will come on board, and of course there are big consulting firms and big technology firms which will come forward and build it for them. So it's really not a BC business, BC kind of guys who will solve for this, because they're old world, and if they could have done something else, right? So that's my first take. In one DBU, can they have multiple outsourcing framework? Answer is yes. You can figure out what to go to one. It's any which outsourcing framework. You can look at it. It can be a branch within branch or a brand within a brand, right? That kind of structure as well. Vimal, have I missed any question? Okay.
Fintech regulation, Samir, how do you see that evolving when RBI comes back on the regulations of fintechs?
So I think you look at my take again. This is a personal view, not even the view. This is my personal view that all of these guys will get regulated very soon. But in the regulation side, some of them will also get a chance to become a proper digital bank. Some of them will also get maybe a small finance bank and all of that. So and maybe some of them will also get a power to acquire the current banks as well. So it's a mix and match of all. And it will be all, now that fintechs are no longer small, and we're not talking about some, just imagine that most of the fintechs, unicorns are much bigger than most of the banks in the country. The 5,000 crores in each number of banks valuation is a large number, whereas number of fintech beyond 5,000 crores is huge. So I think they'll also open up for acquisition. So I think it is all tuned to give up a level playing field for everyone. They will nudge banks to go digital, and they are going to nudge fintechs to acquire license and go regulatory way. So it will be a two-way street. Regulations are around the corner. And you would have seen last time when we had the document which came from RBI, which was on working paper on digital lending. There was a nuances around calling the neobanks also there. So I think it's a mix and match. The neobanks will also come under regulation. RBI started talking about it. There's definitely a lot of committees set up They have a fintech team as well, and led by a very senior person out there. So I think it's a game on. Okay. So next, Vishy, please go ahead. Vishy.
Hi, Samir. Nice presentation. Thanks for taking us through. Really appreciate that. My quick question is, I'm from Tamil Nadu Mercantile Bank. We have a huge rural presence, about 370 banks out of 509 in the state of Tamil Nadu itself. How do you see the evolution of BC agents who are on the field vis-a-vis the DBUs?
I think BCs have to go digital, and most BCs will find it very difficult to go digital because natively they are not digital right now, right? So I think you will have a presence of new kind of entities coming up. Let's say, for example, are showing up some of the neobanks in the rural side which have come up. I think those will have a larger play than old world, and any which way. I think last few years, a couple of years have been very bad for BCs because of the NPAs and all of that, and their own FLDG has been lost, right, in most cases. So I think BC's growth is a bit tricky right now. So I would not link it to DBUs. I think let's think of them as digital agents and slightly different from what we are comparing them to. Slightly different.
Maybe compared to a bank like a Fino Payments Bank, who have grown from a BC heritage, who have become a bank offering services to rural customers through handheld devices, tablets, kind of stuff. I'm referring to those kind of BCs, the digital BCs. Digital BCs
will do well, right? I think digital BCs, no problem, right? I mean, tomorrow, for all practical purposes, some of the digital BCs will also get technically may become a bank as well. So they are basically fintech with a front end, right? And those front end are not meant by them. It's meant by somebody else. So thoda structure aayega. But old BCs, I'm finding it difficult for them to stay around and stick around in such a difficult environment.
Sure. Thanks, Amir.
Thank you. I think anybody has a feedback, please go ahead and share, and we'll work on that. Sharon, please go ahead, Sharon.
Hey, hi, Sabin. Thanks for walking us through this one. So I have actually two questions, if you can hear me clearly.
So yeah, I can hear you clearly, but give me only one question one time. I have a poor memory, I'll forget, right? My processor works one time.
No worries. Yeah. So the first question that I have is, since we're talking about digital business units and a lot of data involved over here, which is sensitive and confidential, how do you see India is positioned, or rather, if I put it, what do you foresee India's readiness in terms of cybersecurity?
No, look, if you look at the background, I think RBI has been tightening the cybersecurity frameworks and regulation for banks for ages, right? I think I remember in my days in my bank around 2015, we had a cybersecurity regulation came back, and they pushed everybody to do it. So I think they have put security first, and therefore every board member and every top management was clearly mapped and held accountable for cybersecurity. I think that way RBI has been pushing, government has been pushing for PDP and other things. Linking this to, I mean, you do it or you don't do it, you have to any which way go secure, ensure the cybersecurity is taken care of and all of that. And of course, you have to go digital. So I think it's hand in hand. I'm not a cybersecurity expert, though my other co-founder is. But my take is that there's no choice we have to make. We have to compromise. We have to work with both cybersecurity and digital, and we have no choices to make. So I think India is ready. We have been digital for now many years, and number of issues we face, given the size of business, is still not very high.
Right. Thanks. My second quick question would be: do you see any correlation between this digital business unit and the digital currency or the digital rupee? Do you see any point of melting where there can be digital currency offered by this digital business unit?
I think I don't see right now direct correlation. It's like so soon blockchain guys will come and saying that linkage as well. So I don't see it right now. Of course, there will be logical inputs, but I don't see a direct linkage right now. It will be incidental. It will happen on futuristic after 2 years, because I've done this. This is easier. I mean, but if I know banking right, I think whenever the digital currency has to be introduced, it will be introduced properly. It will be through apps and all of that. So I don't think that direct correlation, but I'm sure somebody will write a big article on it and do a PR on that. But I don't see a value.
Thanks, Amit. Yeah.
Okay, so I think if there is no other question, please share your feedback. We work in this area with many banks and many fintechs right now in multiple journeys. We basically, and we are also doing a training on digital banking and DBUs coming up next month, and then we also do a consulting side. So this anything you need, and of course, if any help is generally required, you can always reach out. We always tend to respond as much as we can. We are based out of Mumbai, so if somebody wants to meet, we can always do that. With this, we close. If there is no other question, I'll wait for maybe pause for 30 more seconds.
Samir, I got a question, Samir. Can I go ahead?
Yeah, Krish. Maybe quickly introduce yourself, your background, and then and maybe you can put your videos on. It'll be much better. Yeah, Krish.
Sorry, I'm driving. This is Snehal. I joined again, Samir. Snehal Desai from Azenshaw. I had a larger question, Samir. I heard you. So we have been working in various countries. So digital banking with this circular, I suppose what I understand is there is some amount of time given to the local banks, to all the banks, and till the time the new banks are awarded. So how do you see that vis-a-vis? So today, Pakistan, 20 banks are already off the 25 will be awarded. Thailand, Indonesia, Malaysia, so and so. That India as a subcontinent, while payment UPI has been a success story, we would be a little late in getting the entire infrastructure and whatever we are trying to do. Compared to Europe, UK, everybody is much ahead.
No. What I mean, I lost the main thread. Where are we behind? Krish, I mean, I am losing you.
I suppose the network is bad. Can you hear me now?
Sure.
I'll pick it up with you,
sure.
Samir. On
Any other
one,
question, guys?
Thank you.
Thank you, Krish. Thank you. Any other question, guys? If no, we close now. Thank you for joining us, and we'll chat with you later on. Thank you, guys. See you. Bye.